Steve, it looks like a gain of 330,000.
Yeah, big miss, Becky. 330,000. ADP reporting that July payrolls, their estimate for the private sector, not the government sector, just the private sector, rose by 330,000 in July. That's against an estimate on the street of 653,000. They revised down their June payrolls by 680. They're still short of where the government was on that score. The goods sector in July up 12. The service sector doing much better, up 318. But then compare it to that non-farm payroll estimate for Friday, 845. So that's well below where the street believes the payrolls will come in, non-farm payrolls will come in. And looking at it by business size, pretty well distributed across. It's just there wasn't enough of it there relative to the estimate. 91,000 for small business, 132,000 for medium, and 106,000 for large-scale businesses. And again, looking at by sector, you had got the job growth where you would expect it for a reopening economy, leisure hospitality leading the way, education, health services, professional business services, trade, transport, all of those doing well. It's just that you're not seeing the big numbers that Wall Street is expecting. I can also tell you, looking at two key pieces of alternative data that we follow, UKG and Homebase, they're also suggesting a weaker jobs report than the street is expecting. Homebase is very weak. UKG is just saying, hey, we're not going to be as strong as we were in June. So, Becky, an interesting setup for the Friday jobs report where some of the data pointing away from that estimate out there, which is, 850,000 on the way to 1 million. It's looking more like a number could be below 500,000.
Steve, this is a situation where bad news is bad news as far as the market's concerned. We have seen the futures weaken quite a bit on this number. Dow futures now down by about 115 points. S&P futures off by 10 right now. NASDAQ is on the flat line.
Yeah, and I do want to caution, no single statistic has done well in predicting the jobs report in the pandemic. ADP has been off by, I just did the calculation before the number came out, 336,000 on average per month. They've been heavy. They've been more optimistic than the actual number for the private sector over the past 3 months. On an absolute basis, over 6 months, they've been about 300,000 off one way or another. So that's one factor. Homebase and UKG we're learning to deal with. These are new entrants into the efforts to figure it out. So I wouldn't say it's a slam dunk that it's a weak report. I would say that there's now three of the pieces of data that we use that tell us that, I don't know, Becky, maybe this is an issue of the Delta variant getting to a place where it's having an effect. It could also be that the easy, low-hanging fruit of bringing people back to work has been accomplished. There could be limits on how much it happens. And I will say, the issue of the unemployment benefits rolling off. Homebase has a report, and we'll talk about this maybe another day more at length, but Homebase has a report saying they saw no bigger jump in states that rolled off the unemployment benefits than those that kept them on.
We will get two more looks at this. Tomorrow you've got the Thursday weekly claims, and then, as you mentioned, Friday, the big jobs number. Thank you, Steve. Appreciate it. It's good to see you.